Hello and welcome to Business Insider with Mario Toneguzzi on YYC Business. Joining me today is Phil Soper, President and CEO of Royal LePage Canada. Thanks for joining us today, Phil.
Always a pleasure, Mario.
All right, let's talk about your house price survey. The company's, not your house price survey, but the company's house price survey.
I'm married to the company. You know,
yeah, exactly. We are all
one and the same.
The Q2 Calgary price, home prices, the aggregate price, was 9.7% higher than it was a year ago. Tell me some of the reasons why we've seen such a healthy, a strong increase in prices in Calgary in the past year.
Well, it's the big reason is the macro interest in property, in housing, that really is, well, it's pan-continental. You could say it's really a global phenomenon. People have spent much more time at home over the last year and a half, and it has caused them to look very acutely at their living conditions. And some people have decided their homes were lacking. So there's been a boom in renovations, and there's been a boom in property selling and buying. Yeah. In Calgary specifically, we also have the lift from the post-pandemic rise in economic fortunes of the energy sector. Still a very important stimulant for the housing industry and overall economy in Calgary and Alberta. So we have higher oil prices. We have more optimistic business environment, more optimistic people, and the overall macro COVID lift. So, you know, if you look back to that fourth quarter of 2014, when oil prices lost 70% of their value and housing took a hit, yeah, it really has been a long run. Now, a lot of people think, oh God, home prices plummeted in Calgary over that ensuing 5-6 years. They actually didn't. They kind of treaded water. But as the rest of the country saw home prices rising, home prices in Alberta, Calgary, Edmonton, Red Deer got relatively more affordable than neighboring Vancouver or even places like Halifax or Ottawa or Montreal. Places traditionally Calgary has been more expensive than. Now there's a pricing or a cost of living advantage in Alberta.
So one of the things about Calgary right now is the low inventory that's out there, right? And yes. I think some of the most recent data that has come out shows just over two months of supply there. Why do you think the inventory is so low here?
It's interesting what has happened during the pandemic era. Some people have felt very reluctant to go about their normal business. And there's still a bit of stickiness to this feeling. Early in the pandemic, 2020, the first few weeks of 2021, you could understand that completely. Economies were shut down. People were told to shelter at home unless they absolutely had to be out. And they thought, my house is adequate, so I'm not contributing that. I'm not going to get out there and trade. I'm not going to sell my home and buy another one right now. I'm going to wait. And this really skewed. The older our population became, the more tendency what there was to not trade when they might have otherwise. Yeah. The other end of the scale, our young people have been caught up in really examining their life, their living situation. And as I said earlier, some of them found it wanting. So the first-time homeowner has really been a force in the market over the last year and a half, particularly 2020, but continues to be. And, when they come to the market, they absorb inventory, but they don't contribute. That existing homeowner, at least when they buy a home, they contribute one. So there's a balance. First-time home buyers, they just take, they don't give. It's like the BYOB party, and they don't bring a bottle. Yeah. So it's evening out we were at a point where we were actually, and this has never happened before since we started keeping this data like decades ago, we actually crept into the weeks of inventory, below a month of inventory. And just for your viewers, we consider 3 months of inventory typically where a seller's market starts. That's when things get tight. So
Yeah.
in 3 months, when you're down to two, things are really tight, and we were at one. So the emergency level of like just a chronic housing shortage is
Yes.
starting to ease somewhat, but it's still very much a seller's market.
So where does it, just out of curiosity, where does it become a buyer's market?
Above three, but I'll give you a number. Montreal and the Quebec economy has been very strong over the last 3 or 4 years, and it is very strong. As we look at our 2021 forecast, Montreal, which is still affordable compared to Vancouver and Toronto, a
Yeah.
little more expensive than Calgary, but it will have the highest rising prices in Canada. And the inventory levels there are even tighter than in Calgary. If you go back just 5 years ago, the months on market for a Montreal condo were 11. So it
Oh,
was taking 11 months to sell a condo. In recreational property, it wasn't that long ago. You go back to the middle of the last decade, it could take 2 years to sell a cabin, a cottage, a chalet in this country. You just expected when you put a recreational property on the market that it was going to take a long time. Well, not in 2021.
yeah.
We got a lineup out the door of people to snap up those bidding wars in recreational in the country on the mountaintops and lakefronts, and that is highly unusual.
So the house price survey report makes reference to the relocation of people to Calgary from other cities, specifically Toronto, as buoying, the market here. I guess this has been a bit of a trend for a while, but do you think it's accelerating now because of the affordability in Calgary compared to elsewhere?
Well, first of all, I'll give you a very personal example. My daughter, who is a doctor, a recent graduated doctor from Toronto. We live in Toronto, even though my hometown is Calgary. She took a job in Calgary. So she's an internal medicine resident at Peter Lougheed. Her partner, he's a civil engineer with a law degree, pretty specialized thing. He looked to get work in Calgary, and there were competing offers for law firms. And he's a smart young guy, obviously, but he's not like top of his class. I hope he doesn't watch your show, Mario. And anyway, he's a great guy, great personality, but that doesn't show through until you know him, right? And he had all these competing offers. The employment market is actually quite buoyant. We're talking, and he does construction law, just to put it in perspective. You'd think, well, the construction in Ontario would be crazy. But here are two young people, young professionals have relocated to Calgary. And there's her Kat, my daughter, her sisters here, what they're paying for rent. They don't have anywhere near the kind of property she and Luca have in Calgary. And they're living in a great Marteloup, great neighborhood. They're happy as clams. They got their hats on and they're partying up in Stampede. So the overall attraction of the economic, the cost of living and the reviving economy in Alberta is attracting people from BC and Ontario in particular, where the high cost of living is turning certain people off.
Yeah.
This is not a trend that is unique to Canada either. If you consider BC a Canadian equivalent to California, high price, beautiful environment, etc., there is a well-documented migration of young professionals out of Southern California to places like Phoenix, Nevada, New Mexico, Texas, where the cost of living is a lot lower.
Yeah, yeah. A major driver in the market, no doubt. When we look at the forecast for the fourth quarter, okay, the report is forecasting a 7.5% year-over-year growth in Calgary and prices in the fourth quarter. Tell me some of the reasons why you think prices are continuing to rise.
It really has to do with continued demand and chronic underbuilding. You touched on the inventory issue. This is a pan-Canadian, and in fact, a across North America issue, a chronic housing shortage. If you look over the last 11 years, we have underbuilt. We have built fewer homes than the population needs based on household formation, new households, in 9 of the last 11 years. So this is a historical problem. It takes too long. It's too expensive. There's too much of a not in my neighborhood, municipal or local politics keeping projects from moving ahead. And as a result, we don't have enough roofs to put over our growing population. And that means that there's upward pressure on prices. There's also some subtleties in these numbers in the forecast. One of the important class of Canadian residents that disappeared in 2020 and 2021 and is now coming back are the temporary visitors and the new Canadians. So we typically have over 800,000 foreign students studying at our great post-secondary institutions. They're very important for the economy. They're very important for the institutions because they pay much higher fees, of course. And they're important for the housing market and investor landlords.
Yeah.
The other sector that really looks at the investment in property is those that serve new Canadians. So immigration is restarting, and we've got ambitious targets to support our economic growth. And LePage research shows that for the first 3 years, new Canadians live in Canada. Overwhelmingly, they rent, and they tend to move to 4 cities: Vancouver, Calgary, Toronto, and Montreal. Yeah. So there is the return of temporary residents, foreign students in hundreds of thousands, and new Canadians in hundreds of thousands. Yeah. The final group that's adding pressure on our housing supply and putting upward pressure on prices is those in, say, hospitality, travel and tourism that moved in with family during the pandemic because their businesses or their livelihoods were shut down. Well, of course, in Alberta, leading the nation in reopening, that those jobs are coming back in droves. And as people can afford it, they want their own place. So you've got these 3 groups, these cohorts of people re-entering the market, which support, and a lot of them will be renters. And they support the investor, entrepreneur who is buying property, and they are competing with first-time buyers and other buyers in the marketplace. All of that will support prices, albeit without the craziness we saw the end of 2020 and the first quarter of 2021.
Okay, super. Well, thanks very much, Phil, for joining us again.
My pleasure as always, Mario. You have a great day.
Okay, you too. It's Phil Soper here, who's president and CEO of LePage Canada. This has been Business Insider with Mario Toneguzzi on YYC Business. Thanks for joining us today.